please welcome our next session's moderator, Bam Azizi, founder and CEO of Mesh, joined by panelists Clarice Hajezu, CEO of Defense, Zach Abrams, CEO of Bridge, Chris Harms, co-founder and chief business officer of BVNK, and May Zabena, VP of Product, Digital Currencies and Remittances at PayPal.
Everyone, nice to meet you all. You're going to have a super exciting panel today. Hopefully it's going to be the most exciting one. I know everyone is a little bit tired, but we're going to do a lot of interesting back and forth questions and answers from all these experts in the field. We would do a quick round of intro. It would be great if we can go a little bit longer. Now we have like 45 minutes. Tell about what keeps you up at night, and what's your role, what's your background. That would be awesome. We can start from you, Mai.
Okay, thank you. Thanks, Bam, and great to be here. So I'm May Zabena, head of product at the PayPal, which is for our blockchain and crypto and digital currencies unit. Super excited to be here. What keeps me up at night? Wow, okay, it's how to revolutionize and change payments, obviously. So deep into that. Super thrilled at how the industry is changing and moving, and I think there's a ton of opportunity and kind of the moments here for us, especially in the US. So really excited about kind of how to change that and evolve that and continue to bring innovation to the forefront.
Hi everyone, my name is Chris. One of the co-founders of BVNK. BVNK is a stablecoin payments platform serving enterprises. We really kind of making blockchain payments as easy as bank payments, and I guess what kind of keeps me up at night is how fast can we re-platform traditional payments onto blockchain rails. So kind of trying to make that move as quick as possible.
Hey everyone, I'm Zach, the founder and CEO of Bridge. Excited to be here. And what keeps me up at night? Honestly, we're sort of in this moment of this massive explosion in the way, and all the opportunities that exist in the stablecoin space. And there's an enormous number of ways in which folks are using our APIs to build and take advantage of what's now possible. And, we just need to scale to keep up with all that folks want to build on top of our APIs. And it's fun and it's really, really hard.
Hi everyone, I'm Clarice. I'm co-founder and CEO of Defense. Defense is a wallet infrastructure platform. We provide security and access to blockchain for use cases that are mostly financial use cases. We help banks and crypto custodians like Zodiac Custody, Fidelity, but also PSPs like Bridge and others to actually secure and transact on chain. We've been around for about 5 years, and I think something that was very important when we built Defense was to build a platform that was API first, so very much designed for builders use cases. So we were never really much big in crypto trading. What we were actually expecting is what's happening today, which is seeing adoption of blockchain for payments at scale. So very excited for what's happening these days.
Mm-hmm. Great. Yeah, we're going to
Bam,
the name of the panel.
You
want me to introduce myself? Okay.
Yeah.
Bam Azizi, co-founder and CEO at Mesh Connect. Excited for this panel. And Zach, sorry that my picture is bigger than yours. So you were complaining about that. So I'm just moderating this panel and asking a lot of great questions. And I need great answers too. I want to know more about, the name of the panel is Zero to Crypto. So mostly focus on payment use case, stablecoins. So I'm going to ask some general questions to warm up the audience, and then I will ask some specific questions about each of you, if you don't mind. So about like your vision, what you have in mind, like how you're solving this massive problems that we have, which is like fragmentations and the stablecoin in general, like how we can grow as fast as the demand. And so I will ask some specific questions as well. But in general, if you don't mind, Maya, we'll start with you. Your VP of product at PayPal. PayPal was one of the leading PSPs on stablecoins. You have your own stablecoin, PyUSD. Tell us more about like early days of like how did you go from zero to crypto at PayPal, and when did that all this happen?
Yeah, we started in 2020. When what we did is we first introduced on the consumer side of the house. Our vision was to ensure that consumers had a trusted and safe place that they already have a financial future and a financial relationship with PayPal. And so this just basically gave more mainstream access to digital currencies and digital assets. And so we thought that was very important to continue to provide them, you know, that place for them to engage and continue in their financial relationship. And so that was really the beginning and the start of the journey. We launched in both our PayPal wallet as well as our Venmo wallets. And then we just continued to strengthen that equation. We strengthened it with additional features like recurring buys, with price alerts. People want to know what happens with their, you know, with their digital currency. When did it go up, go down? Like, how do I kind of get more control over that and think about it? I want to transfer my crypto in and out of the platform. So we continue to drive and deliver those. But obviously, like, we have decades of experience in payments, and core to heart, that's what we fundamentally believe. There's a lot to be fixed, and there's still a lot broken. We're operating on like 50+ year technology, and so the launch of PYUSD, or stablecoin, was really like a pivotal moment for us, and that moment really started to shape our narrative. As you can see, we've continued to make a lot of engagements into the merchant side, into B2B payments, into changing into remittances, and continuing to evolve. So we're thrilled about that, and there's a ton more to come still from us.
How many users PayPal has? 400 million?
Yeah, 400, and I think it was 35, yep. Something like that.
Yeah. So does every PSP need to have a stablecoin? Like, what are the things that needed for stablecoin to exist, for stablecoin payment to exist for any PSPs? Maybe you guys can answer that.
Well, I mean, I think there's a couple of things when you approach stablecoins as a kind of a fiat-based PSP. So you come into it and, you know, you're thinking about, okay, how can I use this new payments technology? And I think the very interesting and exciting thing about stablecoins is they can approach it in two ways. One is, and I guess it's a unique payments technology in the fact that it can be a payment rail. So kind of think the cross-border use case, but it can also be a payment method. Think a credit card, you know, PayPal wallet, these sorts of things, and you can embed that payment method, you know, similar to kind of what Mesh does, inside a checkout. So you can now pay with crypto or pay with stablecoins and use it as a payment method, or you can use it as a payments rail. So I think approaching it as a PSP, you've got to decide which use case you want to kind of lean into. And then there's a whole host of things, you know, on the back of that. You know, are you going to partner, or are you going to, you know, insource, you can trouble this yourself. There's the compliance considerations. Are you going to go get licensing? Or are you, again, going to run on somebody else's license? So there's a whole host of things that, you know, PSPs need to think through, but ultimately, I think the core thing is nailing the use case and which one they want to start with.
Yeah, I think that almost a lot of money movement is going to migrate to stablecoin rails. It will migrate there because it's a lot faster, or it's a lot cheaper, or there are programmability or other economic benefits to whomever is moving that money. And PSPs are some of the folks who move some of the most money in the world. And so you see pretty much every one of them leaning into stablecoins in some capacity, because they need to move money across borders, and it's cheaper because they have folks who want to pay with stablecoins so they can accept, because they have folks who want to be settled in stablecoins and they want some form of economic choice. But, you know, any business that is moving lots of money, and in particular global, in any way, shape, or form, is going to benefit from stablecoins.
Nice. What else PSP needs? Do PSP need like a wallet infrastructure? Like if I'm a super Web2 PSP, I don't know anything about stablecoin, how can I enable my consumers to pay with a stablecoin? I know it's good, but what are the baby steps toward getting where PayPal is today, for instance?
So I think it really depends where you are in your journey, right? And there's several considerations that you'll have to take. First of all, regulatory. Are you regulated? Are you not regulated? That's going to drive how you're going to build your payment infrastructure, what you're going to be able to accept, and how you're going to be able to transact with your clients. Second, something that is super important is as well the use case, right? So are you going to, if you're regulated, are you going to operate in a centralized way? Are you going to be the custodian of your clients' funds? And so that very much varies whether you're building a remittance application or a cross-border payment platform. Depending on that type of use cases, you'll make very different decisions. Second, it's the go-to-market and mostly the speed to market, right? If you are a regulated PSPs that want to be able to transact on stablecoin tomorrow, well, using bridge of BVNK seems to be the smart answer because you actually want to go to market very fast, right? But if actually you want to build the foundations for a platform that actually is going to enable you to grow your infrastructure and grow your business, then you want to kind of come back to, okay, I need the basis, which is a wallet infrastructure. I need to access liquidity, and I need to be able to kind of wrap that into any sort of interface that my use case is driven. And we like to think that eventually also something that is super important is the security component of it, right? So depending also on the options you have on the table, considering whether they're safe or not for the clients you serve is super important because at the end of the day, transacting stablecoins is transacting money, right? There's nothing different than actually building financial applications, and that means that it has to be secured like banks secure their infrastructure, nothing less.
So I like the security first mindset, and I use your regulation as a segue to ask an important question from you, Mai. Do you see any correlation between countries that they are pro-crypto in terms of the regulations and adoption, or it doesn't matter? What's the role of regulation in terms of how it helps the consumer adoption on? And PayPal is a global company, so you are not just in US, you're everywhere, so.
Yeah, and Bam, I feel like every time we're in a panel, regulation continues to be a big theme for us. So absolutely, regulation helps provide clarity. I mean, regulation helps pave the way, and when it paves the way and provides clarity, as we're starting to see here in the US, that means then more businesses, more customers start to be maybe less afraid to start kind of delving into the space. And so I think in areas, especially in the developed markets, when you start to see then more clarity come through, you start to see more adoption. So I think that's really what it does, and it really helps. And then obviously there's also unregulated kind of areas in the world, and then it becomes obviously much more open from an ecosystem and adoption and consumers. And especially when you think about other countries and inflation, stablecoins are extremely important to people because their money, one day they can wake up and 70% of the value of their currency, their own local currency, could be devalued. But when you think about a stablecoin, it then it will hold its value, right? Obviously, I'm thinking of a USD denominated stablecoin, and that's extremely critical in people's lives, and it's material in what food they can, feed their family, and it's material into businesses. Small businesses survive on cash flow. So these are really important problems that I think stablecoins are helping to solve, and that's where as regulation continues in certain areas, it will just continue to provide that global connectivity. And in other areas, it's a lot more adopted for a dire need for people.
I mean, we generally see regulation as supporting stablecoin adoption in most cases, and the most clear example is what's happening now in the US, where you see legislation making its way.
The Genius Act?
Yeah, exactly. You see legislation making its way through Congress, and that is strongly correlated with an uptick in interest across every single sector in using stablecoins. And the same thing is going to be true elsewhere. And I spent my whole career in fintech. Pretty much everything I've done is in fintech, and one of the things I like about the space is that it's very financially rational over the arc of time, and there are stablecoins are, a better way to build, especially global financial products. And but one of the issues hindering adoption has been lack of regulatory clarity. So the perceived risk of using stablecoins outweighed some of the benefits for some period of time. And now that perceived risk is going way down, and many folks can take advantage of those benefits. Like, Bank of America coming and issuing a stablecoin, the benefit of issuing a stablecoin existed 2 years ago. The reason why they're now leaning into this space is because the perceived risk of doing so is lower, and the opportunity is still enormous. So we're like very, pro regulatory clarity in every geography.
Makes sense. Chris, you're like more global stablecoin infra player. Do you think US, because of regulation, US was behind? Did we have the AI moment in the stablecoin? We were behind, now we're like taking the leadership back again? Or like what do you see in the global sense?
Yeah, I think very much so. So to your point, we've got licenses in the UK, in the EU. Our Singapore license is about to come through. So, we've been, from day one, pushing to be, one of the more regulated players in the space. And the reason we did that is because, the fiat world and the stablecoin world needed to be interoperable, and you needed to do that, with regulation on both sides. So, and we always had one eye on the US going, look, it feels like you're basically building into a regulatory headwind, effectively, and that's switched to a tailwind in the US over the last 6 months, or, last 7 or 8 months, and you're definitely seeing pragmatic bills, pass through Congress and these sorts of things. And as those come to market, to Zach's point, people that were sitting on the fences, knowing full well that there were benefits there to be had, but just couldn't move because of a certain regulatory blocker, have been unblocked. So you're seeing, that really come through, and and we're quite excited about that. And we're spending more and more time in the US. We built a team out here. We've got an office here in New York as well as San Francisco. So we're leading, all steam ahead in the US because of that.
Makes sense. Do you see any trend on your end in terms of like US versus global?
Yeah, I mean, it's been, so we decided to actually start and launch defense in the US pretty much 2-3 months before FTX collapsed. So you can say that our timing was amazing. But what we really saw is that it was a market that really kind of contracted itself, right? And so everybody was actually trying to hide themselves in, Middle East, in Asia, where you had actually clarity on regulation at some point. Europe had some advantage with a framework like MiCA coming to be implemented. And for the past few months, there's been a new kind of flight of adoption in the US, and we've seen much more, initiative. And so that's definitely free the markets. I would say that, especially in our space, there's no bad regulation. A framework and regulation is actually essential to enable builders to start launching their business. Now we see a huge shift from now Europe to US, because actually sometimes bad regulation is also giving some incentives to operate in a different jurisdiction. But I think what was missing, before a few months ago, was the biggest market, right? And so when you're actually looking at stablecoin payments, as you were saying, it's a global first approach, right? And especially first use cases where we've seen some adoption, cross-border payments, you need the US leg if you want to be efficient, right? So we've seen, obviously, and I would say actually last year, the new election, but also having some market validation with the Stripe operation. I think this combination of both has been really what's been triggering today the adoption we've seen of stablecoin across the board, whether it's with fintechs, banks, pretty much within the whole industry.
Yeah, I would, for our business, one of the first sort of like inflection points for us was when PayPal launched PYUSD.
Really?
So thank you for that.
You're welcome.
Why was it an inflection point?
Because it provided, thinking of this like risk-reward thing, the benefits of stablecoins are static, but the risk is what has changed over time. And PayPal leaning into this space and taking a leadership position to launch a stablecoin signaled to the market that this was a bit of financial infrastructure that many people should be looking at, and gave many other folks at other companies the license to, you know, lean in and explore and say, hey, well, you know, PayPal did this thing, you know, and they're an extremely large, public, highly regulated financial institution launching a stablecoin. Maybe we should do the same thing. And these use cases compound, you know, like with y'all launching now, many other people are launching stablecoins, or, you know, with us supporting SpaceX and Scale AI and, you know, all these other folks who are driving adoption of stablecoins in ways that are, you know, very financially beneficial to their business. Yeah.
Yeah. So let's zoom in 2022.
Yeah.
When we met first time, and like to see the stage founders talking about stablecoins, and people were telling like, are you crazy? Like, you haven't seen FTX just collapse, like term sheets getting pulled. It was like ugly days. And I remember you were like telling a story in another panel about like, you were like talking with a lot of these cross-border, and there's like a stable what? Like, can you tell us about those days, and then how things shifted from 2022 to 2025.
Yeah, I mean, when we started the company, we believed two things would be true. One, that stablecoins would be important, and two, that there would be many. And both of those things at the time were like super contrarian. You know, stablecoins would be important. People are like, no, that's definitely not going to be the case.
Never.
and then to believe that there would be many of them is like, you know, maybe one or two would be important, but definitely not. Definitely a lot wouldn't exist. And it took us, you know, we started the company, we built some stuff, we got, you know, kicked off a bank partner, we built some more stuff, FTX collapsed, we built some more stuff, another bank partner went out of business, and the week we launched was actually the week that SVB collapsed, and USDC prices, USDC depegged, and like Sean, my co-founder, and I were like sitting there and we're like, well, you know, we could wake up and it could be like Monday and we have no business. But you know, then you know, we actually got past all those moments, and since then it's just been putting one foot in front of the other, and like, you know, adding use cases. We got, you know, this cross-border payments company in Colombia was one of our first core customers that scaled, and then Bitso, and then we signed the U.S. government dispersing aid payments all around the world, and then you know, and we started working with a bunch of neobanks who were building a bunch of financial applications, and then we got SpaceX, and SpaceX was moving money all around the world with stablecoins, and Scale.ai, who started paying people out all over the world, and so these use cases just started to compound, and the business sort of began to take a life of its own.
Hey Chris, how was early days at BVNK? What was the use cases back then, and now what are the use cases you're focused on?
I mean, we've been at this for 5 years, so it's good to see the market validation come through, I guess. But I think our early use case was actually the stablecoin sandwich, but we were collecting in emerging markets and getting into stablecoins, moving the money cross-border and settling. But back then, it wasn't even like, you know, firstly it was, what was a stablecoin? I don't want to know anything about it. Just take my emerging market currency and give me euros or something like that. So we had to completely abstract it away in the background. But at that point in time, the liquidity wasn't there, the regulation wasn't there, so you couldn't really get to scale with that use case in a, I guess, an API first way. And through that, we learned, look, this is really very powerful payments technology, and started leaning more into stablecoin payments, and this is really where we launched, you know, stablecoin acceptance, so a gateway. We then started pushing into things like payouts, you know, landing customers like Deal, doing their global payroll payouts, and then more recently, leaning heavily into the PSP vertical, and you know, we've got some, you know, customers like dLocal and WorldPay and customers like that are really thinking through a bunch of different use cases. So to Zach's point, and once you launch one use case, you know, the use cases start, you know, compounding on top of them, and the market has kind of really gotten to a point where the liquidity, the regulation is there to kind of build really hyper-scale products that you can get to scale quite quickly.
Makes sense.
And by the way, we like desperately need a better term than the stablecoin sandwich.
100%.
My PayPal is building the payment currency of the world. Is that a true statement?
We're building the what is it?
Payment currency
Payment
of the world with BuyUSD.
currency. I think
What are the, like, do you see anything domestic yet, or just most of the payment use case you're seeing is international?
I think we're still, so we're live in the US and with PYUSD in our wallets. So we're focused a lot on kind of within our wallets or our customer base within some more of the local US use cases. But that being said, there's also use cases like remittances that we've integrated PYUSD as a funding instrument so that consumers can use that as a cheaper way to send remittances cross-border. So it's a bit of a combination of both. Obviously, the value is for what stablecoins can bring is very acutely like obvious when you think of cross-border, because all of the fees, all of when you think about even consumers just paying like a U.S. merchant one day with a stablecoin or with other cryptocurrencies, like versus having a credit card and the 6% fees and the declines that can happen versus like 100% auth rates you can get with cryptocurrency payments. So there's so much benefit that's very obvious in cross-border, but still domestically, like there's still things that are real, right? Like you need to settle for an investment on a weekend, right? Or it's like 5, 6 p.m. and the bank's closed, but you need to like pay that. Like you can't do that today. And in such a modern developed world, it's kind of pretty crazy. We still haven't yet moved the infrastructure in a way that can adapt to our needs, can adapt to like what we need to do. And I have to say though, I completely like, I love the resilience of this panel. Like I love where the passion is, because it's really understated like how much patience, resilience, belief in like where you want to go to spend years and years like being on this journey.
Long game, yeah.
Yeah, and you, Bam, and Nash, it's been just incredible, right? Because we've seen a lot of ups and downs, we've seen a lot of regular changes, but it takes people that like you all on the panel to really be driving that change in the industry to be able to then start driving this utility forward. So I think it's just incredible, just to watch how it is and how we all make each other better. And that's what I love. Like I love we can all take lessons from like what we've each done. The more use cases that go out there, more adoption, the more less scary it is, the more people are talking about it. And so it's very empowering.
Yep. And for domestic use case, and feel free to jump in if you can answer that. Like people are using credit cards, and from consumer perspective, they're collecting points. It's cheap, it's fast, it's instant. Why this is bad, and how a stablecoin can add advantage for domestic use cases for Western countries that credit card is a thing and then people use that.
I mean, we believe that basically every financial application will end up being built on top of stablecoins. Not specific to card payments, but today if you're building you're building the Cash App, or you're building a neobank in the U.S. or what have you, you could go and get a bank partner and do that thing and get an FBO account and build a ledger and yada yada yada, or you could build on top of stablecoins. And stablecoins are going to be 1/5 the cost, maybe even 1/10 the cost, and you're going to get everything inherent to the platform is going to be yield bearing, and you get a ledger for free, which is going to save you dozens of engineers. Your go to market, your speed to market is going to go from 9 months to 2 months. There's enormous benefits that come of building the exact same service instead of using traditional bank infrastructure, as using stablecoins as like the core ledgering and accounting system for your application. And that's going to happen. We see, we have dozens of neobanks built on top of our platform, most of which are outside the U.S., but many of which are expanding into the U.S. We also have, neobanks in the U.S. serving, underserved populations, that hourly workers who are sending wages back to Mexico, giving them basically a store of balance, native to the payroll platform. So lots of new interesting use cases are built on top of this, and it's one of those things where you see basically the cost of building some financial service go from many months and like millions of dollars down to weeks and very little cost, and it creates this like explosion of all sorts of new applications that can be built. And so that's like very clear, already happening. And I think in a couple years there will be like really no reason to build directly on top of like a bank with FBO.
And just to build on that, I think we're seeing obviously new builders building on stablecoins and pretty much sharing the same view, but we're starting seeing actually traditional players thinking, okay, how do I do my system upgrade, right? Because at the end of the day, this is what we're saying. We're talking about, asking the traditional finance industry to review how they were doing financial transfer before and upgrade to include blockchain. So everything will be stablecoin based on the settlements, whether it's stablecoin, whether it's CBDCs, there's going to be different form of it, right? But we see now banks really understanding that this technology is going to be disrupting cash management, trade finance, capital markets, etc., and everything being stablecoin powered. Because once again, in terms of operational efficiency, it's a win. In terms of speed, it's a win. In terms of the operations you can actually do at the same time, which you were not able to do before, it's a win. So now I think it's more about how do we make those two worlds converge, right? And so what are the shortcuts we can think about to enable banks to, nothing is going to change overnight, and we're talking about actually changes that are going to take 10 to 15 years. Some of them will be disrupted, some of them will actually accompany this change. And I do think that starting with just saying, okay, stablecoins are powering cross-border payments, they are moving into very different use cases, and we're seeing actually now payroll use cases more and more being developed, which to me is amazing, because everything will be unlocked with payroll, but the day you actually paid in stablecoin, I mean, game on, right? We all have a wallet in our phone. So as we see this type of use cases being developed, I think enabling banks to just accept stablecoins, like forget about even wanting to launch your stablecoin. It's great if you do it, but first you start by saying, how do I enter this new financial system where actually stablecoin is nothing less than any other payment system that I had before, a check, a credit card, right? And so how do we enable this market to open up so we can actually start seeing those two worlds converging, instead of right now what we see is being very much siloed, and every time you have the last mile, right? And the last mile is, okay, let's go back to traditional financial system, right?
Makes sense.
Yeah.
For you, Chris, in terms of the global cross-border payments, if you go and talk to a lot of these traditional companies that they are running parallel books and they're happy with it, like why should they do stablecoin? What are the advantages for those traditional players?
Yeah, I mean, I think in any sort of money movement business, there's a kind of an order of operation in terms of kind of thinking through, people are buying or thinking through it based on cost, speed, and reliability of the payment, effectively. And as we've spoken about at length, the cost benefits are real and material, and they're there. And then the speed benefits are, banks are closed on weekends, as we know. This thing, this rail operates 24/7, 365. And then the last piece is like reliability. I think something that we don't talk about enough is actually programmability of the actual payment itself. So that reliability, you don't get these sort of chargeback risk. It's full and final settlement on, So when you start talking through all of these, and then you kind of lean into the programmability of these payments as well, where you can start passing metadata through with a payment payload, people start thinking through, okay, well, look, I should pay attention, and then they look at their business. So when I'm talking to a cross-border payments company or a remittance app, they go, I've got accounts in 80 markets around the world. I've pre-funded all of them to make sure my customers looks and feels like an instant payment, but it's actually just a money swap. And then in the background, they use this old, outdated infrastructure to actually move the money. You come to stablecoin and say, guys, drain all your pre-fund balances in those 80 markets around the world, deploy that capital elsewhere in your business, and just do real-time funding, on stablecoin rails. So it kind of depends on the underlying business model of the customer we're speaking to. But if you take so that's like remittance, cross-border payments guys. If you're talking to a PSP, they're generally coming into the market and looking, look, how can I do this in the most risk-controlled way? Generally, that's a B2B merchant settlement. So they're processing a fiat payment. I'm settling a merchant cross-border, and now I can settle that 24/7, 365. And then from there, they start seeing the benefits, and then they start thinking through, how do I do B2C payouts? How do I allow my merchants to pay out users around the world. So it's a kind of direction of travel and kind of a journey you have to walk with them in a very consultative way, which is quite exciting to see, because we were having these conversations 2 years ago, and now a lot of these things are going live and scaling, which is great to see.
Yeah, one of the things to piggyback on that, we were talking to one of the largest retailers in the world, and they have money, in a bunch of different countries, but if they want to move money from the US to Brazil, they have to move money from the US to Ireland, Ireland to Singapore, Singapore to Brazil. And those are SWIFT payments. So you send SWIFT, settle, SWIFT, settle, SWIFT, settle. It takes about, 4 to 6 days after each one of these coordinated things. And really what should happen is they should just have a wallet for each one of these entities. They hit a button and the money moves between each one of these 4 entities within, a minute, and then settles in Brazil. The reason why they don't do that is like coming back to this regulatory point. The benefit of doing this is like immense amount of saved time, immense amount of reduced FX risk, because now you don't have to hold as many currencies and all. They operate in US dollars. They prefer to hold US dollars in all these different countries, but they don't know how it will be treated from an accounting standpoint in Ireland. They don't know how it will be treated from an accounting standpoint in Singapore. And so they don't know if like legally it meets their tax, if it meets their tax requirements as they try to move funds throughout. So coming back to your regulatory point, when that regulatory clarity comes, which it's like, with the US passing legislation and so on, all these use cases begin to open up and become incredibly obvious as folks look to reduce currency volatility, to expedite, their internal operations, to reduce working capital needs in all these different countries.
Makes sense. We have around like 9 minutes. I want to spice it up a little bit. I want to talk about competition. So we start with you, Mai. Two type of competition I'm seeing for PayPal. One is on the stablecoin side. So there's PyUSD, but there are 20 more other stablecoins, and every bank is going to issue their own stablecoin. I'm hearing states are issuing stablecoins, even nations. So how do you distinguish yourselves on the PyUSD side? And when it comes to other PSPs like Stripe did, Bridge acquisition, you have Nuvei and Shift4 announced their crypto program. BVNK did recently a partnership with WordPay. So how does PayPal stand out? And do you think this pie grows and everyone has their own fair share, or is just you're competing the same pool?
Yeah, I think I love competition because it just makes us all stronger. So it's like, bring it on. And I definitely think there's a role to play for everybody in the equation. And I think the more we get into it, the more we can drive this, the better we are. We stand out with our stablecoin itself. Right now, we have, with the brand, is really kind of the biggest strength that I'd say in the industry. It's transparent, it's regulated by New York DFS for PYUSD. It's so strongly regulated, transparent, and carries a brand name which is trusted for decades in the industry for payments. And so when you marry that, it's distinguished then amongst others. And we see this a lot, candidly, from like just partners and merchants and customers that we talk to, especially because they're uncertain to get in the space. Your point on like risk and they would feel more comfortable going with somebody in a brand and a trusted partner kind of in this space. And so I think there is a role to play for everybody. I think that I think while we're getting into right now, to your point, everybody wants to now create a stablecoin. We're going to see a massive proliferation of them, but I think that will eventually come back down. And I think that's okay. It's kind of probably just part of the process that will grow. And I think as people are trying to figure out what role do they want to play, where does it make sense for them? On the PSP side, I think also, again,
you were the first one. So. On the PSP side, you were the first one.
We were the first one, but also, again, when you think about it, like there's multiple PSPs that exist, and again, they all have their different strengths, and they all have their different customers, and yes, we were the first in it, and so we're obviously very passionate about the space. We've been, a bit more on the pioneers in the space, jumping into this, believing it deliberately, intentionally, and slowly kind of rolling out continuous payment features to get in. But I think we obviously have, as you said earlier, like a massive network. We've got both the consumer as well as the merchant side of the house, which makes us unique. And so then you marry that with our customer base, our global aspect that you talked about, then a branded stablecoin. You can just actually imagine where the potential and the possibilities. So that's where I think we stand out, kind of really where our strengths are. But like I said, there's, everybody has their strengths to play, and I think there's space for everybody in the market.
Super nice. And there are only two companies in your space. One is Bridge, one is BVNK, and maybe another 26 one of them. How do you guys see the competition? Like, how do you guys stand out? Like, what's your vision in the next 4 or 5 years? And Zach, tell me, how was it before Stripe acquisition? How was it after?
Yeah, I mean, I think the biggest thing post-acquisition was it just brought a spotlight to the company and a spotlight to the space generally, and in a really, really good way. It was a signal, just like PayPal launching PYUSD was a signal to the market that this was important infrastructure. Stripe, acquiring our company was a signal to the market in, that this was going to be a very meaningful payment platform and a very meaningful piece of our financial future. And we materially felt the, shift along the adoption curve after pre and post acquisition. We had before, basically a lot of the companies who were coming and building on our APIs, they had already gone on the stablecoin journey. In order to find our product, you had to know what you were looking for. And you had to have determined somewhere else that stablecoins were the thing you wanted to use. You became convicted of that. You came to you came to Bridge.xyz just to use us, because you knew. And then afterwards, it became, a lot of folks who were interested in stablecoins, who were, curious about how stablecoins could help them in some capacity. And it became, a little bit of a different, like we were talking about before, like Chris was saying, that it was like a more consultative, conversation. And now those folks are all adopting. The largest enterprises, many of the large enterprises in the world are coming and onboarding to us to build and use stablecoins in some capacity, whether internally, whether paying people out, whether to expand to a different country or what have you. And a lot of that was catalyzed by the acquisition. Coming back to competition, for us, and I'm sure you feel the same way, like our biggest competition is like the old way of doing stuff. Yeah, by like miles. And it's like the status quo. It's like we have this thing, it's super expensive, and payment deliverability is very bad. But is now the time to upgrade? Is now the time to implement this new technology that that requires wallets, that requires a whole different set of tools. And we obviously think the answer is yes, but that's that's the biggest thing that we face. I'm curious how you feel.
Yeah. 1 minute each.
Yeah.
Your time.
1 minute. I mean, it's exciting. Just more broadly, we've been talking. Really, if you sum it up, it's like a replatforming of traditional payments onto stablecoins, and with that comes the TPV moving from traditional fiat payments to stablecoin payments, and that is a huge shift. So I see it like, fiat TPV keeps growing, stablecoin TPV is chipping away at that. You're getting this double whammy of, I guess, growth, and it's super exciting. Like Zach said, a lot of the largest enterprises in the world are coming, exploring, doing things, launching, and we're there to kind of really help them go from this old fiat analog world into this kind of stablecoin world and abstract all of that complexity of the blockchain, wallets, compliance, liquidity, all of that sort of thing, all wrapped in a neat little API. Bring your old bank account, bring an API, and start using stablecoins. So, yeah, I think that's really how we see it. We're playing out in the space for everyone in the market.
Interesting.
Yeah, I mean, last month we processed 1.7 billion in volume. Before we fear competition, there's a long way to go, right? So in my opinion, it's just, right now we're actually starting a market and growing a pie. But I want to come back to something that you just said in kind of full circle to end on what's keep me up at night, right? It is a very embedded infrastructure that we're building, right? We all work with each other. We all are using each other, whether it's for the on-ramping, the off-ramping, the wallet infrastructure.
All entangled, yeah.
It's very much entangled. And so going back to security, because at least this is the thing that actually is keeping me up at night. I think we're still, there's so much excitement in this space that we see a lot of new founders completely coming in this space, sleepwalking through security decision that, you know, a bank compliance officer like would faint literally looking at that, right? So I think going back to basic principle, we are building the financial infrastructure of the future, right? So whatever you're going to build as an application, choosing carefully how you build it, not leaving your funds on an exchange as if FTX didn't happen, not using safe smart contract as if Bybit did not happen, right? But actually making the decision that will enable you not to be in the papers in the next 6 months and not for our entire industry to take a setback is to me, you know, super important. And I mean, we've been trying for the past 5 years to build this industry. So yeah, making sure that we do it properly is the way to go.
Agreed. That's a wrap. Big round of applause for our panelists. Thank you guys. Appreciate it.